Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by Nicole Dines, Paul Strome and Dan Innes. Welcome back, Dan. What have you been following this week?
In the UK, France and other European countries, a second lockdown, but at least this time the general mood in the market seems that everybody's a bit more prepared for the second lockdown and what that actually means for their real assets. In the news, there was another great article in the FT entitled "How Shopping Centres Can Recover from the Pandemic," and that includes some useful analysis and comment from some of the UK's largest owners, people like Aviva, APAM, and Hammerson, who of course we've been following closely. But Mark Bourgeois, who is MD of Hammerson in the UK and Ireland, he said in the report that alongside mixed-use space, that the Hammerson's also considering turning some of its largest car parks and basements into distribution centres. And elsewhere, Chris Irwin, he's the director of real assets and research at Aviva Investors, he said that more intensive data usage needs to be part of the solution, and that's going to support new relationships between landlords and retailers, and rather looking at traditional rental models, a more sort of collaborative approach is required. And elsewhere, we saw in Property EU, Invesco, they've made another acquisition in Paris. It's just over or around 300 million euros, a retail, office and resi building on Rue du Faubourg Saint-Honoré. And that's on behalf of two German pension funds and a Parisian family office. That deal is the latest in a series of high-profile acquisitions and transactions in Paris for Invesco. Other luxury retail, they acquired 53 Avenue Montaigne, they acquired the office building Boost in Saint-Denis, and there was the Parisian logistics facility. Let's not forget the huge office acquisition of Capital 8 in central Paris, purchased from Unibail-Rodamco at the end of 2018. So, Invesco really active. And then last but not least, we also saw in the news on Friday, in EG, the Wellcome Trust. They've made a 500 million plus takeover bid for developer Urban&Civic. Now, you'll remember Urban&Civic because they were founded just over 10 years ago. They were trying to help meet the government's housing requirements and housing shortfall. And in that time, they've kind of become the leading master developer for large-scale strategic sites. But I mean, a £500 million cash offer of 345p per share, that represents a 63.5% premium against the share price on the 5th of November. For it to proceed, 75% of Urban&Civic's shareholders need to vote in favour of it, but it could happen as early as the beginning of next year.
It's interesting that we had a session also last week on logistics in sort of transformation, and Sean Cooley there mentioned around parking areas for last mile logistics and the transformation of some of the retail assets or aspects of retail into last mile logistics. So that's a really interesting topic, I think. And also Doris Pittlinger, who's the Managing Director for Fund Management Europe at Invesco. I was with Doris on a session at Expo Real, and there she was also mentioning how they saw Paris and particularly high street retail as a very attractive option at the moment. So interesting to see that coming through. Nicole, what have you been following?
I was interested in a couple of news that came out of Italy because I think they point to wider trends throughout Europe. JLL has just appointed Barbara Cominelli as head of Italy for them. The interesting thing is she's never worked in real estate. She was chief operating officer for Microsoft. She's had a long career in technology. Last year she was one of the top 50 women in technology in Europe. So obviously that points to the big trend of how the growing importance of technology and data in real estate. So I thought that was an interesting bit of news. And another in Bologna, in central Italy, M&G Real Estate has invested 62 million in a new 15-story student housing. Again, showing that people still believe in student housing coming back in a big way, being especially in a place like Italy, where there's a lot of demand and very little supply. And again, following the trend, the latest trends in student housing, we'll have a gym, a yoga studio, cinema and games room, and a lot of green space, which is now a must. So I thought those were two interesting little nuggets. The Real Asset Media did an interview with Taylor McWilliams of Hondo Enterprises, who owns Brixton Village in London. And he was saying some very interesting things about how resilient retail can be if it's community-based and very local. Brixton Village, 150 local businesses. It never closed during the previous lockdown or this one. And in fact, it did even better than normal because people were working from home rather than going to offices in central London. So people were buying very much locally. And interestingly, Hondo Enterprises has just got the green light from Lambeth Council to build a 20-story office building right next to Brixton Village, which has been somewhat controversial, but it's interesting that they believe that people will want to work more locally as well as shop.
I think it's interesting, and that's a relatively niche area in terms of the retail side, because it operates closer to a market in some way, and is a very niche part of that, and I think innovative part of that as well. And I've been looking across the news recently, and there's been a lot of discussion, including actually Property EU in its weekly data sheet, saying that investors are buying logistics, wholesale, retail and healthcare and selling offices. There've been quite a lot of activity in that healthcare and senior housing area, with recently Cofinimo buying 11 German care assets for 310 million, Primonial refinancing 400 million of German healthcare, and also Lone Star's Real Estate agreeing an offer for the UK pioneers of retail living, McCarthy and Stone. That all kind of picks up on this demand for alternative property investments, and particularly also in the kind of healthcare and senior housing area. Paul, what have you been following this week in terms of the news flow?
Emerging Trends in Real Estate Europe, which the Urban Land Institute and PWC publish every year, is just out. The great thing about it is that it's an opinion survey that's got such high-level access to around 1,000 of the main players in property throughout Europe. So some of the initial conclusions are statements of fact, really. So Europe's property sector is in the midst of a cyclical downturn coinciding with long-term structural changes. Retail and offices will be most affected due to widespread uncertainty over rent collection. Challenges around business travel and potential future lockdowns raise concerns about deal sourcing, and so diminished intercontinental investment activities, giving homegrown investment demand a crack of the whip. So domestic investors currently have greater significance than previously. But the report also raises bigger questions and says that although property is one of the few asset classes to provide acceptable returns while interest rates are in low or negative territory, security of real estate income is one of the big questions facing the industry. It says rent collection problems experienced during the pandemic are encouraging increasing number of investors and investment managers to look beyond real estate's bond-like credentials and to assess the underlying operational risk of the occupiers. The move towards property as a service or operational asset class is an accelerating trend, which fits with the increased interest in healthcare that you mentioned. It's the complete antithesis of the now long gone sign up a blue chip tenant for 25 years and collect the rent approach. And it's perhaps going to force property professionals to look more at operational businesses that have been on the fringes to some extent because they don't operate arm's length leases. So perhaps the whole hospitality, serviced offices and healthcare models may provide some of the templates. Tons in here, and I'll be playing through it for weeks, I'm sure, but it does include league tables. Everyone loves a league table. It looks at the top 10 sector prospects. The top 5 are data centers, logistic facilities, life sciences, new energy and infrastructure, industrial and warehouse, which gets a separate definition to logistics. Interestingly, retail and offices are not even in the top 10.
That's a real change. And data centers, I think, is going to be something that we'll be covering a lot more in these kinds of discussions. I noticed as well that the new Berlin airport had opened after a 10-year delay, at exactly the same time when there was a lockdown across Europe, and we were probably entering a period when there will be almost no flights for some considerable time. But nonetheless, delighted to see it open, having discussed it in all of our sessions on Germany for at least the past 7 years. So good to see that it's finally open. Next week, I'm sure we'll look more at I guess the ramifications of the US presidential vote and Senate vote and what that actually means for real estate. But in the meantime, thanks very much, Dan. Thank you, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week. Thank you.